What's going on, everyone? Happy Monday. I hope everyone had an awesome weekend. Welcome back to the PA morning live stream. Tim, what's up? Alan, it's really good to see you, man. How are you and Ann doing? I feel like it's been ages since we spoke last. Adam, what's going on? Good morning, everyone. Man, it's been a great weekend. We got the free trial launched. If you're still waiting for it, just so you know, we're rolling out the free trials now. So if you haven't received your email yet, just know it's on the way. We're going to be sending out another round today. We have a small team here at PA. I'm just trying to make sure that we don't get overloaded so that everyone has a good experience. Arnold, what's up? Joey, Carl, what's going on, guys? We have a pretty cool live today. Well, then again, when are they not cool lives, right? It's so funny. That's like the running joke at PA now is every single time we do like one of our evening lives or even the morning lives, it's like, it's going to be a good one, guys. Make sure not to miss it. And now we'll post the link and everyone will just be like, it's going to be a good one. It's going to be a good one before we can get in and say it. Alan, you're already in, man. It's the same thing. We're just trying to give people who are considering PA a shot. It's a 14-day free trial. But just for you, Alan, if you want to set up another account, I'll give you the free trial as well. Email soon. Exactly, Joey. So today's live, we got a couple things we're going to chat about. Couple earnings on the table. The earnings season is starting to get going now, right? It's starting to get there. And then we're going to talk quickly about ARCX. It's a trade that we're taking a close look at here in PA. And then we're going to do some scans for some leverage plays, right? Some PA flies, things like that. And Alan, I wanted to chat with you. If you can book a one-on-one, I wanted to talk to you about the new strategy filters that we built in here. I think you and Ann will get a lot of use out of them, given the strategies that you run and ideas that you're looking at. So let's start off with a quick chat about some earnings plays here. So with the earnings seasons coming into play, it's going to be a big focus for the next little while here at PA. Right? We love earnings. We have a huge edge around them. Why wouldn't we be talking about it? So let's head over to the earnings trader tab here and let's see what we got, right? So just a quick update. You're able to now scan by earnings date using the tab here, right? So let's say we wanted to look at trades today. We've got two after close here, two things worth looking at. CCK, not a ton of volume around it. Not really a big move either, but let's pull it up quick and have a look. You can see here, the one problem with this is it's not very liquid. So one thing we might want to take a look at is we come here, we go to the near dated, we take a look. So at the money is, all right, let's go to CCK. Okay, so we only have the monthlies here, so I'd probably give CCK a miss. So what that leaves us to look at is tomorrow's earnings, right? So let's come here, right? By the way, this earnings tab, it's a little finicky, but it just takes a little playing around with to figure out how to use it nicely. When you're off of it like this, the bar is a little tight. So you just click one, it'll pull them up, and now you can see all the dates, right? So then I just pick the day that I actually want to look at, take off the previous one, no problem. So we're looking at tomorrow now, and we're going to do BO, so before open. Right? So remember, we're looking at the trades that we can take today, which means we want to look at earnings that are happening either after close today or before open tomorrow. And we looked at after close today. There was really nothing there for us. So now we're looking at before market tomorrow. And these are the earnings that are coming up. All right, let's pull it up. BO. April 20th before open. All right, so we have ABT on the list today. I thought we had HOG as well. Let me see here. HOG. I could have sworn that we had HOG. All right, let's give it a second and get things loaded up. Sorry about the lag there. Been having all sorts of finicky little problems with our internet. But we are back in action, so let's get this loaded up. All right. I hope that we are back on the stream here. Let's check. Okay, stream should be live. All right, so let's go back over here to earnings insights. Let's take a look. Earnings date. Looking at tomorrow. Let's do before open. And what we're going to want to do as well is put in some liquidity filters here, right? We don't necessarily just want to be looking at everything. We want it to be liquid. We want it to have a decent enough price associated with it. So let's put in our little price filter here and some volume. I'm going to look for a price above 15 and a volume above 3,000. Okay. So one second here. 15 bucks. There we go. Okay. They moved HOG up a day, all right? So where did you see that they moved it up? So it's on the 20th. Would that be correct, Adam? And we have it here on the 20th as well. So the two that I was seeing that I thought were worth looking at, or maybe the three, were ABT, EDU, and HOG. Everything else is small moves, nothing too interesting. I think one that caught my eye as well for yesterday was IBM, if you wanted to take a long vol. Oh, it's already happened, has it, Adam? Okay, yeah. Ooh, it had a big jump too. Good thing we didn't take it. It was only implying, I think, like, what is it, an 8% move? Let's check. Yeah, 7% move. Wow, it would have been a big loser. Thank God. That's very funny. Yeah, so as you can see, guys, it's always super important. Like, little one-offs like that are not going to get picked up here, right? So we have to always be diligent. Adam, thank you for that. So let's take a look at ABT. Just to confirm. Yeah, it looks all good. So ABT, it's smaller, but thing doesn't really move. You can see here, implied is 2.7. Average implied is 2.98, so it's pretty much in line with what it usually does. And its average move is just about 2.1. So if you look at this as well, we have a couple big movers, right? A couple 5%ers. But besides that, it's all in and around the 1 or 2%, with recently there being no major jumps that we need to be aware of. So what we can do here is we can come in and just straight up sell a straddle, right? We don't necessarily need to, do anything else. Right? We have an idea of what we can expect for big moves. Right? Wings would be a little pricey here. You can see there's this smile in the skew, which means the out of the monies on both sides are a little bit more expensive in implied vol terms than the at the monies. So if you're gonna put wings on this, you're gonna want to go pretty wide, right? So let's come over here. Let's go to ABT and maybe structure something out. So what I'm thinking we should do is pretty much just something like this. What is going on here?
Well, it's my bad, dude.
Okay. Let's see here. It's so funny. Jordan and I just have this Thinkorswim open. So you see it switching back and forth there. That's because he's trying to price something out as well. That's pretty funny. I just have his logged in here. That's really funny. So now here we are on ABT. I would pretty much just do something like this. One of the two. I would probably go and just sell the straddle like this. Right, and size it appropriately. Stress this thing to like a 7% move. Right, to the upside or to the downside. Right, I think that's a little bit above the biggest we've seen here. Let's go double check. Yeah, you see we've seen like a few 5.5s, something like that. 5.5 seems to be the biggest move we've seen. Right, you see it here. Maximum 5.5. So I'm pretty confident if I stress it to a 7, that's probably fair. right? So then I'm going to size it appropriately that if it had that 7% move, I'm okay with taking on that risk. So let's say, my account's like 20 grand. Maybe I'm sitting here doing one lot. Take on 500, maybe $1,000 of risk on the high end. And I think that would be okay. Right? And then let's see what this position is going to look like in the morning. So the way that we're going to figure out, right, because we always want to think about what will this look like? What are the wins and losses in our trade here, right? So what we're going to do to price out what it'll look like tomorrow morning is we're going to come here to the Option Insights tab, and we're going to use the term structure. So we'll take off realized vol. We can see here that implied vol for the short term is about 25% right there, and this is the 10-day. So it's a little bit lower since it's like a 5-day. So if we go back here, you'll see it's like 33 here instead of 25. And that's because this is 4 days to expiration. In the terminal, we're looking at a blend where it's a 10-day to expiration. So we can estimate that it'll come down about 25 to 16. So about 9 points, maybe 10 points. So let's come over here. Let's drop vol by 10%. And this is what our position is going to look like in the morning, right? We look to make on about 2 lots. If the stock doesn't move, we'll make about $200, right? And for a 1-day hold, that's not a bad return on capital. And on the extreme low end, we're looking to lose about $1,000 if it blows out more than it ever has before, right? And if it blows out at the most that it has before, we look to lose maybe $500. And if we see the average move, what do we stand to make? Let's see. 2.15%. So let's say it moves 2.15%. We're going to make about $80. $80 US. Right? If it moves minus 2.15, make about $50 on that side. Right? So we're leaning a little bit positive delta here. Now, as you can see, right, it may not sound like that much money, but what we're doing here is we're trying to trade with an edge, and with earnings, you're going to take a lot of these trades, right? So, it may be tempting to be like, it's not worth it if my payoff's not going to be huge, but you need to size your bets appropriately, right? It's not just about, when we're running a strategy like earnings, it's not just about how much you make on this one trade. Because let me put it like this, right? Imagine you wanted your win if you had the average move to be $1,000, right? Well, then you'd be putting on probably 20 lots. Right now, look, right? You have a win here, $800 if it's to the upside, right? So let's say you're even putting on maybe 23 lots. But now watch what happens if we get something like a 7% move. Right? On a 7% mover now, you're losing 11,500. And now we're very, very rarely going to see something like this, where it blows out more than we've ever seen before. But it does happen, right? So you might be going along having these small wins these bigger wins than they should be and enjoying it. But then maybe it comes around where you get hit with one of these and it takes out half your account. And all of a sudden, you're out of the game. Right, so most important thing is to stay in the game here, right? There's no point in having positive expectancy if it doesn't ever realize itself, right? If it doesn't ever actually come to fruition. So let's not get greedy on these individual trades. You want to size it appropriately, right? You want to control your max risk. 3% of your account is really what you should be seeing on a trade like this as your max risk. I maybe stressed it a little heavy, maybe stressed it to a 5% move. But keep that in mind. Right? We have a winning game here. Let's play the game properly. So that's what I would be doing for ABT. I'd be looking to do something like this. Now, if you wanted to get wings, I would probably go pretty wide here. Right? Like, I don't even know if it's worth it because the move is just so small. But I'd maybe go 135, 115, something like that. You're paying 40 cents here, right? Which is about 10% of it. Let's see here. If we go back here, let's see what our edge is, right? We're giving up about half of our edge picking up these wings, right? So that's something to think about as we put on this trade. If you do pick up wings, you want to go maybe $10 wide, giving up about half of our edge. And if we look at it, right, let's bring this back down to a 1 lot so everyone's on the same page. You know, it gives you some max risk control, right? Which may make it easier to scale in, but you're giving up some of that edge. You have to remember that, right? There's a trade-off, right? Protection doesn't come for free. You buy it. So, you know, think about it. When you sell the straddle, you literally are selling the implied move. But when you buy the wings, right? Look what happens here, right? Let's put these at our break evens. Right. Here we go. Right. Put those at our break evens here. Switch to the straddle. You can see on the, okay, let's do the straddle break evens. Okay, so you can see on the straddle break evens, it's about 128.79 and 121.16. Now let's switch it over to the iron condor. Do you see how the break even is brought in a little bit? Right, it goes from 121 to a break even of 121.6, and it goes from a break even of 128.8 to a break even of 128.36. So you now are selling less of a range, which means it requires less of a move for you to be in a losing spot. Big thing to remember there, right? And now sometimes it's worth doing that, but that's what we have to evaluate as traders, right? One of our, the more successful earnings traders in the group, what he did was he dropped the wings and dropped size as well. So per trade he makes less, but per trade he also has a little more edge. Right, which means his long-term expectancy is a little bit higher. I'll just mute my phone there. Always forget to mute it going into this call. Let's see here. What are the guys chatting about? Okay. Yeah, so the guys are all talking about ARC-X. So this is the one earnings trade for the day that I think is really reasonable. There's a few smaller ones that maybe you could look at. I think, let me go back here for a second. IBM, I believe, is aftermarket. If you wanted to take a long vol, this might be something you could look at, right? Implied move 4.5, average move 5.3. We can see it usually has a bit of a move, right? It's not a bad one. Usually it's a move to the downside. Do we have any put skew here that we could maybe use? Not really. It's pretty flat. It's pretty flat. So you could look to buy some vol here maybe. Maybe not a bad idea. Right? Pick up a put if you want for cheap, something like that. If you can get it for a reasonable price. But besides that, yeah, the main one today I would say is ABT. Worth taking a look at. And I just, started the earnings season, wanted to dive deep on an analysis of how we would look at an earnings trade. Now remember, for earnings, you want to be entering that position at the close, not right now. You want to isolate that event volatility as much as possible. And you'll exit in the morning, either if it's a blowout, you got to take the loss, or wait. If it's not a blowout, stock doesn't move, you might want to wait until that implied vol crushes, right? And the market's not implying that event anymore. Otherwise, you're leaving money on the table. Okay, so the next thing we're going to talk about here is what strikes would you buy the put on IBM? So first of all, I don't have a super strong opinion about it, Jenny. Just to be really clear, the things that I'm just going off of there are a couple different things. I look at the implied move for IBM versus the average move, and I can see that the market actually moves on average a little more than what it implies, right? Which gives me an indication, maybe, historically, systematically, the market's been understating vol on this thing. It can't price it very well, but it prices it too cheap. Now, the second thing that I'm looking at here is the strategy P&L for the puts. And I can see that it's positive. It's massively positive. Right? We also see that the first season here, we usually have a, whatchamacallit, some pretty big moves. And when we look at the distribution of moves, the blue, this is a new, Jenny, I guess you haven't seen this yet. So this is what the market's implying the probability of moves to be for this earnings event. Right? Remember this, the market doesn't just say like odds of up, odds of down. It implies a distribution of potential returns for the stock. So this is what the market's implying right now. This is the distribution we actually end up seeing. So you can see the realized distribution is more skewed to a down move than an up move. So maybe just given the level of vol, we can come in here. Let's see what we can do. Can we get away with a little? Maybe we can find some nice strikes here. If we go a little out of the money. All right, let's go 130. 122. And then we'll go 118. Yeah, so you could maybe do something like this. Right, maybe something like this. You can get a nice little 1 to 7 risk reward going on here. Right? So I guess we just had to go a little bit out of the money to get that skew going. Right, so I would maybe do something like this, Jenny, right? 130, 122, 118, 132 fly. Right? IBM should be liquid enough to get this on and off. Yeah, it looks okay. I would probably give this a shot if you wanted to take that downside bet. It looks like there's a little bit of edge, right? A little bit. So play it small, you get a nice little bit of leverage. Not a bad idea. By the way, guys, I'm seeing that we have 16 people on the live here, but only 6 likes. If you're finding this valuable, all we ask is you drop a like on the video. It'd be super helpful. Thanks a lot. So now let's talk about another really cool idea that we have for today. Now we're done with earnings. ARCX. So the guys have been making an absolute killing on ARCX. Right? ARCX vol is just trading way, way too high. They took advantage of the near dated, the medium dated, and now we're looking at the longer dated options. The 2022, 2023 leaps. They are trading at a really high level of vol. Unfortunately, I don't have it loaded into the terminal yet. We're going to be loading it in here since we're all taking a look at it now. But we're thinking that vols are way too expensive there. So this is one of those strategies where we're going to be trading the level of implied vol. We're going to be going out, selling the further dated straddles or strangles, and hoping that the level of vol comes down. So we're maximizing our Vega exposure, hedging away everything else, trying to minimize it. And that's the trade. Selling some vol on ARCX longer dated options. I believe they're trading at around 38, 40 implied vol. We think they should be trading around 25, 26 implied vol. So that's the trade. It'd be something like this. The one problem we have is it's not the most liquid thing in the world. All right, so let's say we come out here and we look at like something like this. Right, so this is what we'd be doing. You can see here it's trading at a pretty high implied vol. So what we'd be thinking is something like this to happen. That's what we think will happen. And if we're right, the money printer will turn on for us and I'll be able to afford rent. It'll be great. And then do we have one more trade? I had one more idea that I wanted to share with you guys today. If we come back over here to the vol scanner, I was just playing around with the call fly scanner here. And I came across one that I liked. Is it still up here? Or has it dropped off now? Hey, hold up. Oh don't know. Has it dropped off already? Yeah. Hey, don't get Arnold. Make sure you don't get too aggressive with it. You don't. Sometimes no fill is better than a bad fill. Don't get too aggressive there. Okay, Baba was what I was looking at, right? Baba's a stock that a lot of people are bullish on right now. Or if we come over here to Baba, we can see that we have some decent little bit of skew here. And we look at the historical skew, right? Looking at the 30-day skew here, we are back down at the lows, right? Pretty much close to all-time lows for the skew here, or 1-year lows. So we can definitely be coming in here and taking advantage of it if you are bullish on Baba. So let me show you the trade that I structured out for it. Check this out. Right? So stock's currently trading over here at about 235. And if this week it rallies up, it's a pretty big rally. Maybe we should actually drop the strikes a bit here. I guess it came down a bit. Do 235, 245, 250. Right, something like this. Let's put a 1 lot on. Right, these are good trades to take if you have a small account, for example, or if you just like these leveraged bets. I don't think Eric M is on the live today, but I know Eric's probably he's probably already in this trade. Now, you risk $200 to make about 800. It was looking a little bit better this morning. Stock came down a little bit in the last little while. Got smoked. But if you wanted to bet on this going up this week, here's a trade you can take. Let's see. There's actually, what this is the 235, 245, 250, 132 fly trading into the call skew of Baba. Right? Remember, when we're taking these trades, what we're looking to do is take advantage of that skew risk premium. So we're buying one close to at the money, maybe a little out of the money. Then we're going up into the skew. We are selling 3 there, and then we're going really far out of the money and buying 2 as a bit of a hedge, right? And that's what gives us this flattened part over here. Right, if we took off the 2 here, I guess it doesn't work with doing it this way because it shortens the middle as well, but no problem. All right, so this would be the trade here. Now, one last thing. I know everyone's looking at Tesla right now. Tesla just got crushed today. Let's see what the real-time quote is here. Right, down about 5%. All right. You can see lots of skew in the short term here. Right, if you wanted to bet on this thing going down or going up, you can most certainly do it. Now, we're not seeing like unusual skew for this thing, which is why it's not popping up high up the list on our scanner here. But we do have that short-term skew. So if you wanted to bet on it going to the up or the downside, you can get something on here almost with certainty. Let's take a look. Let's see. 23 April. Right, if you wanted to bet on it continuing to trend down here. But we all know nobody bets on it trending down. You never bet against Elon Musk, isn't that right? Let's see. So we go 695. 695, let's go down. Well, let's see what the straddle's going for here. $50. Jeez, that might be too much. 695. Remember, the straddle price that we use there, it's arbitrary, right? This is the number we use to make it simple to do. You can pick your own strikes, though, right? So let's see. We go 695, 675, 660. Let's see what that looks like. To start. Might be a bit tight, but... Are they giving us a credit for it? That can't be right. Oh, wait. 665. Haha, it's saying, okay, no, there we go. So you're getting almost a 1 to 10 risk reward betting on it going down here. And you can get it on for pretty cheap, right? Most people, Tesla's expensive to play, but look at this, right? Expiring this week, you can bet $190 to potentially make $1,800 if Tesla trends down. Right now, keep in mind, you're probably not going to get this max payoff, but you can get a really good risk reward trade going on here. Betting on Tesla continuing to trend down. So, with that being said, we're actually right on the dot at 11 a.m. here. Those are some trade ideas for today. The reason why Tesla's going down, I'm pretty sure has to do with that car that caught fire. And it raised some issues about the autonomous driving, the batteries. There was a few issues that got raised because of it. So, if you think that will continue to grow in the news for Tesla, it may not be a bad idea to come in here and put on something. Let's let this load quick. It's being super slow. Okay. Well, anyways, with that being said, guys, we are going to wrap up the morning live stream here. So if you have any questions for me, feel free to just drop it in the comments or send me an email to sean@predictingalpha.com. Like I said, the free trial for Predicting Alpha, full access, is now live. If you haven't signed up for it, make sure to drop me an email. I'll get you on the free trial list. It's 14 days. You cancel in your 14 days, you don't get billed. We've had a few people coming in recently. I believe we've actually just passed 100 members with Predicting Alpha, which is super exciting. The movement's growing. It's very, very exciting. And the energy's at all-time highs. So if you're looking for something like that, make sure to pop in. Arnold, live for tonight, we're going to be looking at the week ahead. I'm going to be using the strategy filters, looking at the week ahead, coming up with some trade ideas, sharing them with the group. All right? Okay, everyone. I hope you have a great day, and we'll see you tomorrow.